Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Newcore Gold Limited. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Greg Smith, VP of Exploration of Newcore Gold Limited, which trades on the OTCQX best market under the symbol NCAUF and on the TSXV under the symbol NCAU. Welcome, Greg.
Yeah, thanks, Matt. It's great to be here to provide an update on Newcore Gold and our NCAU Gold project in Ghana. I'm an exploration geologist with over 35 years of experience now in the industry, and most of that working on greenstone-hosted, structurally controlled gold deposits like we have at NCAU. NCAU's an advanced exploration and development project, so I will be making forward-looking statements. I invite everyone to visit our website and see all of the cautionary language there, as well as the NI 43-101 reports. So at Newcore and our NCAU project, we've got a proven team, management and directors have a long track record of success in the industry. As well, we as a group own 22% of the equity, so we're certainly right there with shareholders. We've got a great asset in Ghana. It's a tier 1 jurisdiction. We've got a good-sized resource, and we just released a week ago an updated PEA, which really underpins the value. Some spectacular results there for the PEA, and we'll certainly be spending a lot of our time today reviewing those updated results. And that really is underpins the value, but we've got a lot of upside potential as well. We'll spend a few slides looking at the multi-million ounce potential that we have and some of the additional targets on the project. So first, we'll look at those PEA results. As I mentioned, they just came out a week ago today. Really excited. A lot of work put into this study. The highlights here: 371 million after-tax NPV. That's at a 5% discount at our base cost gold price at $1,850 US dollars. The 375 million NPV sits with 58% after-tax IRR. So real spectacular numbers on the project. They're driven by low initial capital. So this is a straightforward open pit heap leach operation that we're designing here. It benefits from that low initial capital because we don't have the costly milling operations necessary, and as well, given the jurisdiction, we're able to use contract mining, so that keeps that upfront capital low, and it provides us with a real robust gold production profile at 122,000 ounces a year for the 9 years that are currently in the mine life. Excellent payback at the 1850 of 1.6 years, over 1 million ounces produced over the life of mine. The study was led by Lycopodium, their independent engineering group, recognized globally as a partner of choice. We've got a table here that lists just some of their recent projects that they've designed and been involved in building for a number of companies in West Africa. All of these have come on, either on time or ahead of time, and either at budget or under budget. So it shows what can get done in West Africa, and it shows what can get done when you've got the right people working with you. And significantly as well, Lycopodium is currently involved with Newmont at their Hafo North project. Newmont's investing $1 billion there to essentially double their production in country in Ghana, which is currently the largest gold producing country in Africa and the 6th largest in the world. So again, great to have all of this expertise in country. Zooming in now on a few more of the details of the PEA. So again, straightforward open pit heap leach operation. It'll be processing 8.1 million tons a year. Again, I mentioned the contract mining, which keeps the upfront capital low. Life of mine strip ratio 2.67 to 1. Again, important that that companies state that. That's again a big driver. Essentially, most of your costs on mining operations are moving this material, so it's great to see that low. And also, just as important, that all of our deposits come right to surface, so there's no pre-stripping required before we can actually start mining the ore. So again, building on the 371 million after-tax NPV, the 58% IRR. We'll be processing life of mine about 70 million tons at a grade of 0.6 grams per ton. The bulk of the material, again, these are contained in shallow pits, so this is an open pit operation, and these pits only average 75 meters deep, so they're relatively shallow pits, and again, that helps keep the cost down. In terms of the production profile, again, a rather steady production profile, giving us that 122,000 ounces per year for the life of mine. We start at the beginning mining and processing 100% oxide material. We move to blending that with some of the upper transition material. As we get a little bit deeper, the material gets a bit harder, so we install some additional crusher capacities in years 4 and 5, and then it allows us to, at the back end of the mine, process that lower transitional and fresh rock material. So the fluctuations that you do see here largely related to the average grade, and that gives us a peak production in year 6 of 155,000 ounces. Now, we will look at some of the exploration potential in a couple of the slides coming up, but certainly we believe over the next half a dozen plus years, we do expect to be able to find some additional oxide and near-surface transition material to both increase this production profile and as well fill some of the gaps that you currently see there. In terms of the life of mine after-tax cash flow, we're looking here at the base case of 1850 gold price in the black, and then the sort of upside in terms of recent prices that we've seen and the gold at 2350. So again, we're looking at with the base case life of mine cash flows of 524 million. That increases to an impressive 855 at again some of the recent prices that we've seen in gold. So lots of leverage to the gold price here. Probably as significantly, though it's also really protected on the downside. So we've talked about the great numbers that we have at our base case of 1850, but if you stress this project either with operating costs, capital costs, or gold recoveries in terms of negative 10% and even negative 20%, you can see we've still got a very robust project. So this is again something that can certainly operate at whatever gold price might come. So in terms of the updated PEA, there were a number of significant inputs into it compared to our previous PEA that we did in 2021. We, of course, updated costs. We included the new resource, which came out last year, and we'll look at that in some detail ahead here. But one of the other items was metallurgy. We've done a significant amount of metallurgical test work. A lot of that has been over the last couple of years. So we see here more than 390 tests have been completed. Well, 350 of those we've done over the last 2.5 years. Now, all of that test work is giving us results in the sort of 90 to 95% range in terms of gold recoveries. We've actually used a conservative 81.8% recovery in the study, and that's driven by 85% for the oxides and transition, and 75% for the hard rock. So we've done again dozens and hundreds of bottle rolls, advanced to doing a number of column tests on all of the different deposits. You see some of those images of the column tests there on the right. The recoveries as well, have a good sort of time. They're quick recoveries. The first 30, 40 days, you get the majority of that 90-95% recovery, with additional recoveries going beyond 60 or even to 90 days. So it's what you want to see for these types of deposits and operations. We, of course, have also studied the comminution work. That's testing the hardness of the material, all of that information used to design the flow sheet and the operations that are part of the PEA. So we advanced beyond those column tests. One of the tests that we've done here are bulk scale pilot heap tests. So we've done 2 of those, 2 15-ton samples, 1 each from our 2 largest deposits of Sium and Boyne. Together they make up 76% of the resource. So really important that we see this material functioning well. These are sort of tests that are done in real world conditions. So the heaps here are 2.5 meters high. Our design program is actually to have 5-meter heaps. But again, these work really well as to sort of show what it's going to work in real world conditions. And here in the graph, you see the real fast recoveries in that first 30-40 days. You're getting right up to the 85-90 range, and then again after that it slows down but continues to recover to its maximum, which in this case for Sium was 93.5%. For the Boyne sample, 90.3%, averaging 92% in this bulk test. And again, keep in mind we used 81.8 in the study. Importantly as well, low consumption rates. So again, keeping the costs low from an operating perspective. Low consumption rates of cement, cyanide, and lime. The project benefits from great infrastructure. We're 10 kilometers from the town of Enchi. It's a town of 15,000 people. We house all of our crew there currently, and the idea in the study is to continue to do that. There's available accommodations there. The town is serviced in the lower picture here, you see, by a paved highway that goes right into the town. You've got a power line that runs across that. You've got gas stations sitting there. You've got cell towers on those hills in the background. We have cell coverage for most of our project area. So again, this is benefits from this infrastructure. We don't have to spend a lot of money building kilometers or even tens or hundreds of kilometers of roads. And again, that's one of the big items that helps keep that upfront capital down. This is a plan map that sort of shows that infrastructure for the life of mine. That dark line at the top is the paved highway we were just looking at. In the upper left part of that is where that picture of the highway was taken, and just adjacent to that is our current facility. So we've got core warehouses there, crew houses that house our current exploration staff. So again, great infrastructure. The lines that you see going south down the map from that are existing gravel and dirt roads which service the areas where we're working. In terms of the other parts of the image, the gold areas are the life of mine open pits. You see Boyne on the left-hand side, Sium in the sort of lower center. Again, those 2 deposits make up 76% of the resource. And then the life of mine heap leach facility and recovery plants, crushing facilities, everything there located between those 2 deposits. And then the smaller deposits of Niam, Quachikrum, and Tokasea, which the satellite deposits we mine later in the mine life. So that's the basis of the PEA. Again, we're really happy with the numbers that came out there. Really strong sort of snapshot of the project. But now we'll spend a few minutes looking at the blue sky potential, where we think we can make this project bigger and better. So we are located in southwestern Ghana. You see Accra on the right side of this image. That's the capital of the country. It's where you fly into internationally. 2 really well-known gold belts. They've been producing gold here in Ghana for millennia. The Ashanti belt being the more historic one that includes the giant Obuasi deposit, over 66 million ounces. It's one of the largest gold deposits on the planet. We're in the parallel Sefwi Bibiani belt, ourselves down in the southern part. Our neighbors at Chirano and Bibiani, both 5-6+ million ounce endowments there. And then we've to the northern part in our belt, we've talked about Newmont's Ahafo mine, where they're investing $1 billion to basically double the production that's coming out of that. So definitely in the right real estate here, focusing in on that southern part of the CFW belt. That's our project on the lower part of this slide, coming off of the regional Bibiani Shear. So this is sort of what connects us to our neighbors. That's not what hosts the gold deposits. It's the second and third order shears coming off of that regional structure where you can see all of our deposits, the red dots there sitting along those structures. We've got multiple structures that run the length of our 40-kilometer long project. So really well located on top of these structures with proven exploration potential. Total of 248 square kilometers. As I mentioned, we've got 5 deposits. We've got 9 targets that we've drilled. We've actually got more than 25 targets on the project. Again, we've got potential for both additional near-surface deposits, and as we'll see in some slides up ahead here, some deeper deposits. So this is the current resource. Again, it was updated in 2023. Most of it is pit constrained and using $1,650 gold price. There were a number of advancements with the 2023 resource estimate. We added a 5th deposit at Tokasea. We, for the first time, had a higher grade, deeper resource component. So it currently sits at 136,000 ounces. Not enough to build a mine on right now, but certainly a proof of concept. And as we'll see, where we believe, lots of room to grow with some of that slightly deeper mineralization. And for the first time, an indicated resource, so 743,000 ounces in the indicated category within the 3 largest deposits, Siyum, Boyne, and Niam, and then an additional 972 in the inferred category. Again, keeping in mind that all of that is constrained within pits that are relatively shallow, that go to an average depth of 75 meters. In terms of the upside potential, so the map on the right again shows the entire project length, 40 kilometers, multiple structures crossing that 40 kilometers. We recently announced that we've increased the size of the project with the Omampe license, which is on the lower right of the project. So we've currently got crews in the field working there. We've got the 5 deposits. All of those are open along strike. In particular, the Boyne deposit, if you could see the darker area there that represents the pits that currently host the deposit, really only testing about half of the structure that's there. We've got surface anomalies to the south. Likewise at Siyum, which is our largest deposit, a number of targets there, both directly along strike and as well on a number of parallel structures. And then a series of targets where we've just done some first pass drilling, notably Arati and Kojina Hill, where we've got some really good results, some of the best results in the history of the project on our most recent drilling program, but where we just haven't quite done enough drilling to have a resource. So we're definitely looking to get back in there, and some other areas where we've advanced on the soil anomalies to the trenching stage, highlighted results there of between 10 and up to 60 meters in width, with grades that again we're looking to get back in there in the next phase and start our first pass drilling. So in terms of where we are in terms of our exploration, this is a good graphical way of showing that. We've got 2 longitudinal sections here, our NC project on the top, our neighbor at Chirano on the bottom. These are slices along the length of these deposits, showing where we are at our state of development. So I've mentioned that essentially, all of our deposits are constrained within these pits, 75 meters from surface. So really shallow drilling that's defined that work. You look at our neighbor, they started with 13 shallow open pits, but now the last decade they've been essentially mining mostly underground. So they followed a series of these deposits underground. They're now mining at depths of plus 800 meters. So you compare that to our 75 meters, and obviously we've got quite a ways of potential to go. Now we have started testing this. Again, I mentioned the modest but great proof of concept, 136,000 ounces that are included in the resource. Half of that is at our Niam deposit. So this is where we've done the most deeper drilling. And it is important to keep in mind that when we talk deeper drilling, it's just below the depths of these pits. So in this case, a maximum of maybe 120 meters. So this deeper mineralization is starting about 150 meters below surface, goes down to about 250 meters. And you see the intercepts here, anywhere from sort of 5 to up to 20 meters wide, and anywhere from 2 to 7 grams per ton. So very mineable widths with mineable grades underground, and lots of room to keep expanding on these. In this case, we've got these 2 higher grade chutes that are developed. It is important to note that in the white areas there underneath the near surface mineralization, where there are no dots, that's because we haven't done any drilling there yet. So completely open, the 2 chutes that we've defined, and open along strike to look for some additional mineralization. So I'll go through some details, some corporate details on the company now. Our president and CEO, Luke Alexander, CFO, Danny Lee, myself, again, exploration geologist, Mel Karwaska, VP Corporate Development and IR, Brandon Fraser's most recent addition, our VP of Projects. Brandon has experience designing, building, and running these heap leach operations, so it's great to have Brandon on board. And Dan Wilson, our country manager. Dan is Ghanaian. He's been with us here on the project as long as I have, and before, which is in 2010. So great to have Dan and our team in country. All of our personnel in country are Ghanaian, and it's one of the real advantages of working there. They've got multiple universities that are putting out high quality engineers and geologists. Again, dozens of mining operations with some of the largest mining companies in the world. So you're really able to get good quality personnel in country. And then in terms of the board, the company was founded by Doug Forster and Blaine Johnson. They've had a number of successes in the market, most notably Newmarket Gold, which was acquired by Kirkland Lake, Calibre Mining, which is a growing gold mining company. So lots of capital market experience, lots of technical experience, both on the board and in management. 172 million shares outstanding at the moment, fully diluted, 202, 307 million Canadian in the cash at the beginning of the year. We've got an additional 3.3 million potentially there with some warrants that are in the money. As I mentioned, management and board owns 22% of the company, so we're definitely aligned with shareholders. We think like shareholders. The institutions own 45% of the company, so it's great to have these long-looking, strong institutions. In particular, the larger holdings are in Franklin Templeton, Ruffer, Aegis, and NCAUF, and a number of others that are noted there. So great to have that underpinning the company. So to summarize again, real strong management and board, along with shareholders. We've put money in at the same prices that their current shareholders have. So this is not cheap stock that we gave ourselves. We're aligned with our shareholders. Strong capital structure, and I mentioned those institutions that own our shares and are supportive of what we've been doing here on the NG Gold Project. NG Gold Project itself, again, real strong resource base that we updated in 2023. The PEA, which we just released a week ago, with some real spectacular numbers there with the NPV, IRRs, and really we believe that that's a stepping stone to bigger and better things as we continue to unlock the potential both to find additional near surface oxide and transition material, but then slightly longer term as well to start looking at this deeper, higher grade fresh rock. So with that, I'll start to look at some questions here. This is again some of the technical disclosure. We are very active on social media as well. This is a pretty quick presentation. There's a lot of additional information that's on our website. As well, again, on the social medias. So please feel free to check that out. So let's just look at a couple of questions here. First one is thoughts on drivers. Again, we see a lot of upside potential on this project. We are currently active on those greenfield sort of targets that we have, both right from the sort of soil sampling stage up to the trenching stage. And we look forward to certainly getting in some of those areas where we've defined this gold mineralization and doing the next phase of drilling. And then in terms of the PEA, we're analyzing the numbers now. Obviously, we're working on the 43-101 report, which will be coming out here in the next we've got 45 days from the announcement, so that'll provide a lot of additional details there. And then we look to build on that. And with the group that we have, we're looking at unlocking value here any way we can. And one of those ways is certainly, given the low upfront capital, given that Ghana is a great jurisdiction, we could again look to continue to advance this project, get a pre-feasibility study done, and really look to potentially build this. So that kind of flows as well. The next one was milestones to the end of the year. We've got a bunch of work that's ongoing. We've got the exploration work. We have a significant amount of metallurgical work that continues as well. So again, it'll really look to build on the PEA and continue to optimize. We've got a next one, again, sort of flows along with that, which is timeline to production. Yeah, we really benefit in Ghana from, again, it being a jurisdiction where they're used to mining. They support mining. That's a real sort of refresh situation to have. So not the case everywhere in the world, obviously. So, yeah, we're looking at modest timelines here, 12 months to get sort of the mining lease side of things settled, 12 to 18 months to, again, maybe do updated studies. A lot of the work that we've done is at a state now where we can move potentially to the next stage, to the next PFS. One of the things that we would look at doing there, obviously, is moving some of that additional inferred ounces in terms of the resource into the indicated category. So we've got a good 743,000 now. We've got ways of really adding some additional ounces into that indicated category inexpensively. Again, these are shallow open pits, so we'll do a bunch of shallow drilling, targeting the oxides in the upper transition, use RC rigs, which are cheaper and faster. So that's something that we'll look to do in the relatively short term, is convert some of the additional inferred into indicated. Indications or opportunities to reduce your all-in sustaining costs. So yeah, obviously the all-in sustaining costs are driven by the inputs that we've used in this study. The base case 1850 is certainly pretty conservative given what the gold price has been recently. In terms of the costs, one of the ways there is if we can, again, find some higher grade material and move that up front in the profile. As we continue to expand these deposits, they'll give us additional opportunities. We are doing that additional work on the metallurgy as well. As I mentioned, we've got decent consumption values with cement and cyanide and lime, but we'll look to fine tune that as well. And as if we could lower some of those inputs, those consumables are quite significant inputs in the overall cost. So if we can find a way to lower some of those while still maintaining a robust recovery, then that has some potential to lower some of those costs. Drilling news. So yeah, someone talked about the drill, asking about the drilling. So yeah, we did do over 92,000 meters of drilling in a 2-year period there. So we have done a little less than the last year. We had an announcement mid-year last year on some additional deeper holes at NIAM, and that was related to incorporating about half of that drilling information went directly into the updated resource last year in 2023. The other half I've kind of talked a little bit about is on some of these other targets, Kojina Hill, Irati, that are open but not quite ready yet for resources. So we've got some additional drilling to do there. But yeah, this is a project where, again, we've completed over 92,000 meters of drilling. I think we put out 25 news releases over a 2-year stretch there. So we have definitely done lots of drilling, and obviously that's what has been allowed us to expand the resource and optimize the results of the PEA. Somebody asking about price targets. I'm afraid I can't really go into that, but again, we will be busy. We'll have a good news flow. Certainly, the results of the PEA have been very, very well received, and we'll look to build on that. So, with that, I see that I'm out of time. I thank you all for your questions. If I wasn't able to get to it, I will pass them on to Mal, and she will get in touch with you.